This next slide is just a table. If you want to refer to some of the hard numbers, you don't have to pick them off the chart, so let's move ahead. We've seen a lot of mergers and acquisitions announced in the press this summer, I think, and they've involved some of the largest carriers in the country. All of them have some amount of presence in California, although in most cases, they're not our largest carriers. Of particular interest from a California perspective would be the Centene and HealthNet merger. Centene is the parent of the recently added plan in California for Medi-Cal, the California Health and Wellness, which is serving rural expansion counties throughout California. And then you also see here the Blue Shield and CareFirst. So this is two California carriers talking about merging. CareFirst has a large Medi-Cal enrollment, and Blue Shield not so much. And so that would be a logical combination, probably from the perspectives of both of the players. Finally, last slide is really for your reference. Just gives you a sense of who the players are in the rank order in terms of enrollment for Medi-Cal managed care. This is not the absolutely most up-to-date in terms of the total numbers, but I think that the relative rankings of the different insurers would be similar. Currently, we have about just under 10 million Medi-Cal enrollees in managed care. And I will say one final note, the county-based plans, which there are 15, I think, have a major role in servicing the Medi-Cal managed care enrollment. Thank you.
Thank you. Is there any questions from any of the members on this? Thank you very much. I do have a question. You know, obviously there's a lot of changes that are occurring. You'd mentioned mergers, public enrollment has increased significantly. You know, and obviously we're going to be dealing with the MCO tax, and that's what this hearing's about. As an industry watcher, just in general, and just seeing all these trends, what would you suggest policymakers be aware of and keep in mind as we craft an MCO tax proposal? Any thoughts?
I have one thought, which is that there are some taxes already being levied on plans which I think would be important to have a handle on. There are certainly state premium taxes in some instances, assessments. There has recently been the tax to cover the rate stabilization policies in the individual market, and that amounted, I think, to some $3.50 per member per month, and that will sunset, I believe, soon. Other taxes that I have seen that come to mind would be Cover California's need to assess enrollees for the operations of Cover California itself. I believe that's in the neighborhood of $13 and some per member per month. So these are significant additions to the per member per month premiums that we saw, and I think it would just be important to weigh whatever you decided on in the context of these other obligations that are atop the premium.
So would you anticipate then, because the feds are requiring that now, prior we used to do the MCO tax by just taxing the plans that took Medi-Cal patients, they'd be made whole and we'd be able to draw down federal dollars, whereas now we're going to be taxing every health plan. So you're saying keep in mind that there are additional taxes there that in that case, then if you tax the additional health plans that don't see Medi-Cal patients, they may pass that on to the consumer. Is that a concern as well or not?
I think all taxes probably ultimately end up with the consumers. I think I'd like to provide a little additional information in follow-up for you, showing the level of taxes being reported on the medical loss ratio reports. by plans in California. And I could give that to you on a per member per month basis. That would not be inclusive of any covered California assessments or any ACA assessments for premium stabilization, just because of the time period. I'll put the caveats on it.
Okay, so you'll provide us with us. I believe Senator Mitchell had a question, and then Senator Leno, so we'll go Senator Mitchell.
You showed the two-bar chart that showed the for-profit versus nonprofit breakdown.
Yes.
And there was a slight majority in terms of nonprofit. Are there any policy implications with regard to the MCO tax? And do you think that trend will continue where the non-for-profits will continue to have a larger share of the market, if you will?
I don't personally know what your authority is to impose a premium tax and whether the nonprofit status of a carrier would exempt them from paying it. I think that's a really important question. In terms of the tendency to retain the 50-some% nonprofit situation, I would say that the one thing that might cause that to change would be really something that's already going on, which is how are we counting Blue Shield? Blue Shield considers itself a nonprofit and has its reasons for doing so, but they are now paying taxes to the state and federal. So I don't know exactly what to do about that gray area.
Where they would fall.
Where that would fall, and that's large, and however you change in the matter of counting, that would change that significantly.
Okay, I believe Senator Leno had a
Thank you, Mr. Chair. Thank you for the presentation. I want to refer to your slide 15, please. Actually, 14 is the bar graph, and then you've got the figures spelled out on 15. So it's the same information.
Yes.
How does one account for some of the volatility that we see here? And actually, it looks like CalPERS is more volatile than the large and small and even individual.
Right.
But the fluctuations are by significant percent some years. What's driving all that?
Well, I think there's a couple things happening. First off, anytime you have a single employer group, their rate increases are not likely to be as stable as an average of many different employers. So I think when you combine, when you have an average that's computed across, say, 9 million or 10 million people, and maybe 2,000 groups or something, that's going to be just by nature more stable.
So there's more volatility than we're seeing in these figures.
Yes, yes. And so I think in that sense, it's perhaps a little bit maybe unfair. I mean, I wouldn't necessarily say you should hold any one group to the same level of stability, but you would want to think, I think, about how it averaged out over time.
And do any of these fluctuations concern you?
Well, I never like to see an increase over 10%, and I don't really like to see an increase over 5%. I guess if you, and I'm not in charge of CalPERS, but I think anytime you're taking large increases, you have to ask yourself what's going on besides basic costs. Are you retaining level benefits that maybe is basically causing what I would call benefit creep? How a $500 deductible 10 years ago was more to you than it is today, something like that. But I don't know if that's what's going on. It might also be sometimes you get a situation where the risk pool develops sort of an adverse trend, and there's very little you can do to stop that.
And just one additional question with regard to Cover California, and there's been some very positive press with regard to how well Covered California is working, and that the 4% increase is much lower than some of the naysayers said it could possibly ever be. Though there were a couple earlier years where it was pushing 10%, but, and this may be a 6-year span is not enough information to draw any serious conclusions, but could the earlier years, especially 2011 and 13, where we saw the 9% plus increases, have been just Covered California getting its footing, and also the full effect of ACA hadn't yet been actualized, but now that in 14, 15, 16, we're seeing really stable?
No, but what I will say is on the individual increases, those reflect the rate filings of individual carriers for existing products. So if you had, that is the median rate increase filed by insurers at the state. And so when you see 8, 10, 9, that's the median of all the carrier increases for existing products. When you see 16.6 in 2014, that is the dislocation caused by the ACA. That is a reflection of the fact that there were almost no existing products renewing in 2014 because new products were introduced for Covered California and all the ACA compliant plans. That is primarily grandfathered coverage, and what you saw is the people that kept their grandfathered coverage took big increases on for the main part to keep it. And you could argue about what the reasons for that are, but it is fact. So when you see that 2014 figure of 16.6, you're seeing that that really is, unlike all the other increases in the line, that's not a very big portion of the individual market enrollment being reflected because so many people had to enter a brand new plan, if that answers your question.
Yeah, and I'd just like to also clarify, because my understanding, Covered California didn't really start into effect until 2014. So
Yes.
again, the numbers, the 9.946 and the 9.5, explain those again to me, what those were?
Yeah,
because
what are
Tell me which numbers exactly?
for Covered California, because Covered California didn't actually start
Right.
enrolling until 2014.
Right.
So unless I misunderstood, what were those first 3 years of 11 through 13? Where'd those numbers come from?
Oh. If you could please cross those off.
Okay.
Good.
Yeah, because I was going to say, because it wasn't in existence then.
Absolutely not.
Okay. Thank you.
Thank you.
I believe Senator Morlock had a question.
Thank you, Mr. Chair. Just a quick question. Ms. Wilson, we're seeing on the slide 16 a lot of merger activities. And I'm just curious, if you were to project out into the future, are we going to see this industry become like other industries, like the automobile industry, where you only have 3 major car makers? Or are we just seeing everybody adapt and adjust to the marketplace by just consolidating?
Well, I think that is already true in some states, but that is not true in California. I would say certainly if all these mergers took place, it would, would reduce the number of carriers in California, but we have so many strong state-based players. I don't see this merger activity as having a huge impact on competition or other factors in our state.
Then what is the major motivation for merging?
Well, I think it's more national, really. I don't think it's being driven, for the most part, by California matters, with the exception, of course, of the Blue Shield activity. All that's within the state.
Thank you.
And I guess it would also be fair to say there is this pretty strong California component to the Centene activity, but they weren't competitors before. It's more like adding geographic extensions onto their existing activity.
Thank you, Mr. Chair.
Thank you. Seeing no other questions, I want to thank you. Excellent presentation, and I appreciate your comments.
Mr. Chair, I'm sorry.
I'm sorry.
That was slow forming my question.
Sorry.
The,
Senator Anderson.
when Earlier, you had mentioned, well, at least I understood you to say that any cost increase would be passed on to the consumer. I think Dr. Hernandez asked that question and you answered it. If that's the case, and we're looking at this MCO stopping a year from now as we know it now, I mean, as far as our arrangement with the federal government, what kind of a time frame will we need for the insurance companies to pass those costs on? Would they be able to wait till this time next year for the MCO, whether we go with a tiered method or whether we go with any other method? Would they have enough time for the rate cases? Or in general, could you give us just a picture of when they put their rate cases in the timetable? I don't know if I asked that in a very clear way.
I think I know what you mean. So you're asking what the lead time is for rolling up an additional cost into the rate structure. I couldn't speak to the internal activities of the insurers, but I can say that the rates are filed with the regulators pretty far ahead. For example, right now it's summertime, and all of the rates increases being proposed, say, for January 1 effective dates are already at the insurers. So whether they were filed, how long, exactly which date they were filed, I mean, that's something that you definitely could find out more about. And then certainly the rates, the lead up to the rate making cycle internally for insurers has an additional band to it, but I guess that would be something they could speak to better than I.